All right. Welcome, everybody, to this week's coffee chat. We are here today with Mark Gottlieb. Mark is an independent insurance professional who offers insurance products and protection from a wide array of well-known insurance companies. He offers a range of insurance products, including, but not limited to, long-term care insurance, life insurance, Medicare products, and annuities. And today we're going to chat with Mark about long-term care and Medicare. A little bit more about Mark. He has served as a captive agent with several large insurance companies, but he switched his status over to an independent broker, which allows him to maintain certification with multiple companies, giving everyone some flexibility in finding the right plan for them. So he can help you shop around and figure out what's best for you. So welcome, Mark. Thanks for joining us.
Thank you. Very grateful to have this opportunity. So thanks very much.
Yeah. So let's start and chat about long-term care insurance.
All right. Everything that someone should know about long-term care insurance real quickly.
Yes.
Because it's a lengthy subject. I teach a lot of classes on both long-term care and Medicare, generally an hour in length. So this will be quite condensed, of course. So it's long-term care, Medicare 101.
Yes.
So long-term care insurance, what is it? Well, it is insurance that can help protect you in the event that you have a long-term care need or a chronic illness, which is going to last 90 days or more. So that's the basic of it is simply it's an insurance product that can help you pay for home care, for adult daycare, for assisted living, and for nursing home. And they can all be extremely expensive, that's sure. So that leads me into the segue of why should you buy long-term care insurance? And, in that respect, first of all, need estimates suggest that up to 70% of people will need some long-term care protection in their lives, which is a staggering statistic. Because everyone would rather be in denial and say, well, I'm never going to need long-term care. So that is significant. Now, the biggest challenge in planning for long-term care expenses is that you just don't know how long you're going to need it for. Let's make the assumption there is a chance I'll need some long-term care help. So how long am I going to need it for? Well, the statistics are all over the lot. It could be 6 months for 2 or 4 hours a day of home care. It could be 10 years along the spectrum of home care, assisted living, and nursing home. We just don't know. So that's the tremendous challenge. Why else to buy? Certainly, if you have a great amount of assets, you may say, well, I probably won't need to buy a long-term care insurance policy and pay premiums. I think between all of my assets and all of my income streams, I think if anything were to occur, I'd be okay. So I'd say smaller percentage of people are in that situation. Unfortunately, the bulk of us are probably somewhere in the middle, which means if we're faced with significant long-term care costs, we may need some help from a third party known as an insurer to help us cover those costs.
And Mark, that brings up, sorry to interrupt you, but
not at all.
Given the current political climate, right, I've been reading a lot and talking to people a lot about what is Medicaid going to cover, right? Is that the safety net it once was? And I think in this world of insurity, that looking at something like long-term care insurance will help a lot of people kind of cover those what's going to happen nerves, right? Not people that are currently on Medicaid because, we can't do anything at this point. But for people who are looking towards the future or who are thinking about their parents, right, who may still be able to qualify for a reasonably priced plan, that long-term care insurance is becoming suddenly much, much more important as a planning option and way to think through what am I going to do and how am I going to stay in control?
Absolutely. And a lot of adult children, of course, are beginning to experience the fact that they have an elder parent that's going through this situation. And now they're realizing for the first time, oh my God, these costs are really significant. What am I going to do if something happens to me? And I don't want to put that burden on my children. That's assuming my children would even be able to accept that financial burden.
Right.
So it's a tremendous challenge, but you're also using it. You can use it to protect assets. So let's say you have some money set aside, you want to be able to pass on to children, grandchildren, a charity, whatever it is. And you're going, okay, let me try to protect those assets, or at least some of them, by, again, having an insurer be the first place that I'm going to call on to help me pay. Now, if I use up that pool of money, then I'll have to go into my next asset pool. So that's very important. You're also protecting your loved ones. There's a lot of stress associated with providing, caregiving to to your adult parents. As a matter of fact, the statistics are out of the roof, and there are a million studies about caregiving. I know AARP is very active in that, vicinity, but it's a big issue for employers as well, because the employee is not able to be as productive. And then certainly you can't really expect your adult children to be assuming they want to even be bothered. I shouldn't say bothered. Some people, it's a labor of love, to be sure, but it is burdensome as well. It's very stressful. It takes away from other activities, even for the chance to work, which can be kind of significant. And then, of course, if your adult children don't live around the corner or down the block, how long is it even going to take them to be able to commute to help you?
Right.
And to say nothing of the fact that more and more adult children are living in Kansas City, San Francisco, Honolulu, or wherever else around the world we now choose to live. So, it's a very significant issue in terms of being able to both afford long-term care and having the choice of different agencies and inpatient communities and settings that you can choose from. It's a very growing industry, that's for sure. All we have to do is look around.
So, and that's a good point, right? Giving choice to both the older adult and their kids. And I think having either being able to private pay, right, gives you lots of choice, but having something to fall back on, right? Having an insurance policy opens up a world of, okay, what are options? What works best for our family? Because that helps with that payment portion of things.
Exactly right. Money is very important, and again, causes a lot of stress. It's a lot of infighting between adult children. Mom needs some care now. Here's how much it's going to cost. Are we all going to split it evenly? Are we all able to split it evenly? Do you want to contribute to this? And, sometimes in terms of caregiving as well as in paying for the care, you find, a lot of controversy within families. So again, it's very helpful to have a policy. So this, if you will, I'll transition into what are the different types of policies that are available.
Perfect.
Because a lot of people do not really understand that they're still locked into the understanding that it's a traditional, what I call traditional policy, which is also known as a standalone long-term care policy. So you buy it just for the long-term care protection, which is fine. If you need it, you have that protection. If you don't, in most cases, you are not getting any money back. That's one of the major objections for people to buy long-term care insurance is, you mean I put out $2,500, $3,000 a year for 25 years? Now the person has passed, their significant other calls the insurance company and says, well, Mark paid out $70,000 in premiums and he has now passed. So how much of that money are you giving me back? And The answer is nothing.
None.
Because that has to go to, cover the whole risk pool of people that are involved. Second issue with traditional policies is you can have premium increases over time, which no one likes. We're very understandable. Dear Mr. Gottlieb, you've been paying $250 a month, but because when we did our actuarial analysis, we underestimated how many people would be collecting from our big pool of funds. So we need to ask you to kind of chip in. So I'm going to take you from 250 to 285. Well, I hope my agent told me that first of all, because he's supposed to. What do you mean? I thought once I paid the $250 a month, it was locked in, but not with traditional policies. So there's the two major objections. But the good news is you can buy a traditional policy. It will give you a stream of money to help pay for long-term care. But more and more people, because of those objections and because the industry has tailored itself differently, has moved into something called hybrids. So with a hybrid, it's combining two functions. The most popular hybrid is a life plus long-term care. So you're getting a pool that serves both as a life insurance policy, but you can use it to pay for long-term care. Good news is if you don't need it to pay for long-term care, the life insurance policy reverts into a death benefit. So the family is getting the money. Or your loved one or whoever you've decided to be your beneficiary. So you're not going to lose money, which is a very nice feature, I paid out $60,000 before I passed. I still have $100,000 of death benefit. I didn't need it for long-term care. Someone's getting $100,000 as a death benefit, tax-free, of course. So that's a very nice feature of that kind of hybrid. There are a variety of different types of life plus long-term care policies, which I really won't get into in this brief encounter today. But there's also something called life plus chronic illness. Now, I always try to, remind people, be aware of the difference between a long-term care rider and a chronic illness rider. With a long-term care rider, the money will be standardized benefit. So if I buy $100,000 and they tell me I'm going to get $3,000 a month for 33 months. It's going to work out that way. If I get a chronic illness rider for $100,000 and I think I'm going to be getting those payments when I need long-term care, that may not be the case. It's a whole number of different criteria that are used by which the insurance company will pay out. So it's important for people to be aware. I think a lot of agents are a little misleading. They're not supposed to do it, but they say, yeah, this is fine. It doubles as a long-term care policy. Well, yeah, you'll get some money out of it, but it may not be as much as you think you're going to get. So beware, and always read your outline of coverage. There are also annuities that have long-term care features. So you can just take a chunk of money, put it into the annuity with the long-term care rider. Okay. So that's a nice feature, for people who've inherited some money, who, saved some money over time, whoever, even you can use an IRA or a 401k. There are methods to reposition it into, money that can go to paying for your long-term care policy. So, those are very interesting. And again, and the nice thing about that is the annuity will grow in value over time. So once again, if you don't need long-term care, that money that has grown in the annuity will go to a beneficiary. So once again, takes the fear out of what did I pay for and not get anything back from it.
Yeah.
So it's a very nice feature. The last thing, I'm going to talk about it for one moment here, just because you actually raised the subject of Medicaid, where there are Medicaid compliant annuities where people can reposition money to a significant other or spouse and therefore move that asset, at least as of now. That's going to be a big issue as they look at the whole Medicaid situation. But as of today, a person can take the asset, transfer it over to their significant other or spouse. That money is then freed up from the Medicaid asset allocations, and that secondary person, we call it the community spouse, let's say, will get that income stream. And I, who needs to go to a nursing home, can now apply to the state to help, hopefully, of an elder law attorney to get Medicaid funding. So that's still another option that's out there. So that's long-term care, and I'll try to finish up because I know we're still have another section of this.
Yeah, so let's talk about Medicaid.
Best time to buy. I'll finish long-term care with best time to buy. I always answer that with the sooner the better. The rates are better, the younger you are, plain and simple. I've been running some rates for people. Pretty much, it's been a new phenomenon with people in their 40s. Let's say I've run a few 45 to 48, 49. The premiums are great. I'm used to running them late 50s, early 60s, even beyond, but the more age you have, the less the benefit will be for the same price,
right?
Or you'll get the same benefit, but the price is going to be very significant. So you want to do it as soon as possible. There's also issues with underwriting because you don't automatically get approved for a long-term care policy. There is underwriting involved. In certain cases, a person will be denied. I get these questions every time about, I have this particular issue. Do you think I can apply? And there's a long list, unfortunately, of issues for which people will not be approved. Just a few of them will be pre-Alzheimer's, dementia, COPD, certain cancers, Parkinson's, multiple sclerosis, rheumatoid arthritis.
Okay.
The short list of a long list of disqualifiers. On the other hand, people may think if certain things have happened to them health-wise that there's no way I'll get approved. I use the example of breast cancer and prostate cancer. You've had breast cancer, you've been treated, your indicators are great, same thing with prostate. If your PSA level is at 0 for a certain period of time, everything else looks good, you can turn around and apply for a policy.
Good.
But if you were preferred in the rating before you had that diagnosis, and let's say it now takes a year or two to treat the diagnosis, there's a period of time after treatment. So I'm a 60-year-old male. I'm in great health. I could buy a long-term care policy now. The pricing would be tremendous. I get that diagnosis. Hopefully, I'll be in a situation where a couple of years later I can apply, but I'm now going to be called standard instead of preferred, which will add about 20% to the premium. I'll also be a couple of years later older in age, as much as we hate to recognize that fact. And so that, again, is an issue for people. So I always say the sooner or late, better than later. And I don't know if you have any questions on that basis. That was my 101.
Yeah, that was really helpful. It was a good Cliff Notes version of the of long-term care. So, so let's turn to Medicare.
All right. So, between long-term care and Medicare, we're looking at healthcare expenses in retirement, which is a very, serious and important topic. Written about. There are a tremendous amount of studies on the subject. And I'm happy to share information with you and with listeners, without obligation, of course. Happy to send anything have a lot of information. But Medicare, in a nutshell, you hear about Medicare A, B, C, and D.
Mm-hmm.
A and B are government. Okay, a person has to apply to the government to get coverage for A and B. A, in a nutshell, hospital coverage. B, all the outpatient things, everything from doctor visits, emergency room, imaging studies, ambulatory surgery, on and on, all B. B only pays 80%. I shouldn't say only. I'm afraid with the situation now, it may go to 70%, but for now it's 80%. So people are looking to supplements to pay the other 20.
Right.
Person, if you get A and B, then typically you'll get a supplement and then a Part D prescription drug plan. Or Part C, which everyone sees on the television every half an hour once annual enrollment occurs, which is in the fall. C equals Medicare Advantage. A person can join an Advantage plan instead of buying a supplement plus Part D, because the Advantage plan will incorporate D.
Okay.
In a nutshell, what are the things we need to know? Is always, which one should I do and why? Medicare supplements are going to be more expensive, but they're going to cover, most of them will cover that full 20%. Part B paid the 80, you're going to get the 20%. Plus, there's a Part A deductible through the government. Right now, it's $1,676. If you have a Medicare supplement, it will pay for that.
Oh.
And some other things as well. So it's a very nice protection. There's actually a high deductible version of a Medicare supplement, which costs you a lot less. And it's a good option for the people who'd like to consider that. But the other big thing about Medicare supplements is that they will cover any Medicare certified provider in the country.
Oh, nice.
Okay, so you can go wherever you want to whomever you want, which is a great feature. I mean, you see the ads all the time about freedom of choice kind of thing.
Mm-hmm.
The issue with Medicare Advantage, the premium's very low, but then you have a series of copays.
Okay.
It's a la carte. Everything, you do copays for every visit, for every diagnostic service, whatever the case may be, up to a fairly significant out-of-pocket maximum is what we call it. Unfortunately, the out-of-pocket maxes are much worse in Maryland than they are in D.C. and Virginia, honestly speaking.
Oh.
So in Maryland, I really caution people more that, if something significant happens, the premium was inexpensive. It's great. And they even throw in a little dental, little vision, this kind of that as an inducement to get you to want to join. But the downside, the bottom line is, if something significant happens, you're going through a lot of treatments, hospital days, rehab, etc. Those copays add up until you get to that out-of-pocket max. So those are really the two distinguishing factors. A lot of the Advantage plans are offered either as HMOs or PPOs, if you've heard those terms. So HMO, you must stay in network. They won't pay anything out. PPOs, you have a wider choice. You can go out of network. You will pay more.
Mm-hmm.
So, again, there's always risk equation.
Yeah.
And that's kind of the bottom line of Medicare choices with prescription drug plans, which people certainly should have. Yeah. Even if they're healthy. Some people say, I don't even take any drugs. I'm blessed. So you're indeed blessed, but at least let me tell you about least expensive drug plans.
Yeah.
Because you don't know. Anything can happen anytime. And you can't just get it when you need it. It's like buying car insurance after you're in a wreck and you call the company and ask them to get you insurance. So you get a significant diagnosis again, and you don't have a Part D prescription drug plan. You're going to be paying retail until the annual enrollment period in the fall, at which time you can make choices of your prescription drug plans.
Yeah. So Mark, tell us quickly how that works, right? How do you enroll, or when do you enroll, and when can you make changes?
Well, I'm glad you mentioned that because, yes, I meant to talk about enrollment periods. So thanks for that perfect segue. There are actually a number of enrollment periods. So first of all, if a person's still working at 65 and beyond, they do not have to, they're told to sign up for Part A, which is free for most people. They don't have to sign up for Part B because that has a premium, and the premiums vary by something called IRMA, income-related monthly average adjustment. So the more household income, the more you'll pay in Part B IRMA. That's kind of an aside to your question. So anyway, the point is you don't have to sign up for anything but A if you're still working after 65. You can choose to if your employer coverage, or let's say you're the spouse of an employer and that coverage costs $500-600 a month, and I can get Medicare coverage for $350 a month with a supplement and a Part D, then that's the obvious choice to save some money. But okay, so you're employed, you leave employment, or you turn 65, you sign up for your A and B. That will be your initial enrollment period. Okay, so now you're covered. And okay, I see all these ads in the fall called the annual enrollment period. So during October 15 to December 7 is the annual enrollment period. Anyone can join anything, make changes to their Medicare Advantage plan, make changes to their prescription drug plans. And the changes do differ every year. The companies change plans, change premiums. So I always encourage people to just take a look and make sure that what you have is still the best. Too many people, let's say, who bought a number of years ago, that everyone years ago seemed to buy the AARP United Healthcare plans. And, I'd say, can I help you with your Medicare choices? Don't bother me. I have AARP. But the truth of the matter, and I'm not besmirching AARP, great organization, leading, provider here, but there are a lot of other well-rated insurance companies, and the plans differ in their pricing. So you ought to look around. Same thing with Advantage plans. Now, supplements don't go by the annual enrollment periods. They're just private plans. So we're talking Advantage plans and then prescription drug plans. Now, to take it one step further in our remaining moments, something called the open enrollment period, which differs from annual enrollment. A lot of people use it interchangeably. But the truth of the matter is there's the annual enrollment period. Then from January 1 to March 31, there is the open enrollment period. So let's say I joined a Medicare Advantage plan. I signed up by December 7. It took effect January 1. I start using the Advantage plan. I don't like it, or I didn't realize that someone didn't provide coverage within that network. What can I do? Do I have to wait till the next annual enrollment period? The answer is no. You're in the annual enrollment period. You could change your Medicare Advantage plan during that period, no questions asked. That's very nice.
All right, so this is my takeaway, Mark. Medicare is very complicated.
Yes.
If you are turning 65, you should find a professional such as yourself, or if your parent is turning 65, like a couple months before, reach out to someone like Mark who can help guide you through all of this.
Yes.
Because A, B, maybe C, D, it's alphabet soup. So, right,
Mhm.
you need someone like Mark to help you figure all this
Out.
right?
I think that's true, and I also let people know there's no fees and no obligation with my service. So I point out you're getting all of my expertise and information. Then you make a choice. I do need to submit the application. That's how agents get paid, through a commission for submitting the application. But all the work I do up to that point is for no charge whatsoever. So it's kind of, to me, a win-win. You get all of that. You get signed up. I take the headaches out of the whole process, and you're good to go.
Yeah.
Yep.
So,
Awesome.
Lynn, we've got one last question for you.
All right,
Great.
Mark. So what is one item that you can't live without in your day-to-day life?
Insurance.
I love it. I love it. That's perfect.
Perfect. Well, Mark, thank you so much for joining us. This was great. I will drop your contact information in the comments. So anyone watching this, if you want to reach out to Mark, you can reach out to him directly, or shoot one of us or anyone at Will Legal Group an email, and we'll connect you with Mark if you want help with long-term care insurance or Medicare. And we'll talk about life insurance in another round.
Yeah.
That would be great. And I will point out there are a lot of choices. So
Yeah.
the fact that I'm certified by all of these, I can save people from having to make 8 different calls to 8 different companies to try and figure out the differences, because it really does get overwhelming, both on the Medicare scene as well as with long-term care products.
Yeah, I know.
So,
All right.
Awesome.
Well, excellent. Thank you,
Thank
Mark.
you.
We really
very
appreciate
much
having you.
appreciated. Good to see you both. Talk soon.
Bye.